Get ready because the news cycle is absolutely exploding, and here at Google Trends Hub, we're bringing you the absolute latest, the most critical updates you absolutely cannot afford to miss. We're diving headfirst into a world where tech giants are facing major rulings, where innovation is pushing boundaries, and where the future of how we access information is being rewritten. From landmark legal decisions to groundbreaking investments, buckle up, because this is your essential download of what's happening right now. Let's get into it. First up, a seismic legal decision is shaking the foundations of the tech world. A federal judge has handed down a ruling in a massive antitrust case that could fundamentally alter how one of the biggest players in the game operates. We're talking about major implications for how search results are shared and how default services are set on the devices we use every single day. Will this change the internet as we know it? You'll want to hear this. Then, we pivot to a story that's sending shockwaves through the financial markets. A significant legal victory for a tech titan has not only reshaped the competitive landscape, but has also sent stocks soaring. We're unpacking what this means for the future of big tech and how it impacts the companies we rely on for everything from browsing to operating our devices. This is the kind of development that defines an era. Next, we're zeroing in on a critical judicial decision that's already making headlines. A judge has weighed in on a high-stakes antitrust case, and the verdict is in: no forced sale of a beloved web browser or a dominant mobile operating system. But that doesn't mean the story ends there. We're exploring the nuances of this ruling and what it means for the ongoing battle for digital dominance. This is a must-know. And finally, we're looking at the broader economic impact of these tech titans' moves. A massive investment is being poured into the infrastructure that powers our digital lives, signaling a huge push into the next frontier of technology. We're breaking down what this investment means for job creation, innovation, and the very future of how we interact with artificial intelligence. Stay tuned, because you won't want to miss a single second of this. Don't go anywhere. Stick with us for all the details. And if you're new here, make sure you hit that subscribe button, ring the notification bell, and smash that like button so you never miss an update from Google Trends Hub. A landmark ruling: Google must share search results but keeps Chrome. In a pivotal moment for the tech industry, a federal judge has delivered a significant verdict in a high-stakes antitrust case against Google. The ruling, delivered on Tuesday, mandates that Google must share its search results with qualified competitors. This decision, however, comes with a crucial caveat. Google will not be forced to divest its immensely popular Chrome web browser or its widely used Android operating system. This outcome represents a complex victory, allowing the tech giant to remain structurally intact while imposing substantial changes to its operational practices. The core of the legal battle, initiated by the Department of Justice in 2020, centered on allegations that Google had leveraged its dominance in online search to maintain an illegal monopoly. U.S. District Judge Amit Mehta, who had previously ruled in favor of the DOJ in the liability phase, determined that Google had indeed acted as a monopolist to preserve its market position. The remedies phase of the trial saw the DOJ proposing a range of measures, including the sale of Chrome and the sharing of search data, to foster greater competition. Google, while agreeing to discontinue exclusive contracts that lock its services into default positions on devices, strongly opposed other proposed remedies, particularly the sharing of search results. The company's defense argued that the market has evolved significantly, especially with the advent of artificial intelligence, offering consumers numerous alternatives for finding information. Google emphasized that forcing the divestiture of Chrome and Android would extend beyond the case's focus on search distribution and could potentially harm consumers and its partners. Judge Mehta acknowledged the evolving landscape, noting that generative AI tools have indeed altered the dynamics of the case. He highlighted that the remedies phase was not only about promoting competition among general search engines, but also about preventing Google's search dominance from extending into the nascent field of generative AI. While Google has been ordered to implement certain behavioral changes, such as sharing search data and facing limitations on exclusive distribution deals, the decision to allow it to retain Chrome and Android is seen as a significant reprieve. This ruling is a mixed bag for all parties involved. For Google, it avoids the potentially devastating impact of divesting its core products. For the DOJ, it secures a mandate for increased competition and data sharing, even if it didn't achieve its most aggressive remedies. The market's reaction was swift, with Google's stock showing a positive response to the news, reflecting relief that the company's core assets were not dismantled. The Department of Justice has yet to issue a detailed statement, but it is widely expected that they will review the decision carefully, and potential appeals are on the horizon. The implications for the broader tech ecosystem, especially regarding default settings and data access, are profound and will likely be felt for years to come. But what does this intricate legal maneuvering mean for the wider tech landscape and the companies operating within it? We'll break down how this victory reshapes the competitive arena for big tech. Tech stocks soar as judge rejects Google's forced divestiture in antitrust case. In a development that has sent ripples of optimism through the financial markets, a federal judge has ruled against the U.S. Department of Justice's most stringent proposed remedies in its antitrust case against Google. Specifically, the judge has decided that Google will not be required to divest its iconic Chrome web browser or its ubiquitous Android mobile operating system. This decision, announced on Tuesday, marks a significant legal victory for the tech giant and has been interpreted by investors as a major win that preserves the company's core assets and operational structure, leading to a notable surge in its stock value. The antitrust lawsuit, filed by the DOJ in 2020, accused Google of illegally maintaining a monopoly in the online search market. In the remedies phase following a previous liability ruling, the DOJ sought drastic measures to curb Google's alleged anti-competitive practices. Among the most impactful proposals was the forced sale of Chrome, a move that would have fundamentally altered Google's integrated ecosystem and its ability to leverage data across its various services. The department also pushed for Google to share its search data with competitors, a measure Google vehemently opposed. U.S. District Judge Amit Mehta, while acknowledging Google's monopolistic behavior in search distribution, ultimately deemed the divestiture of Chrome and Android to be an excessive remedy. The judge's reasoning underscored that such a drastic measure would go beyond the scope of the case, which primarily focused on search distribution practices. Furthermore, the court recognized that breaking up these core products could indeed harm consumers and business partners who benefit from the integrated Google experience. Google's response to the ruling highlighted its perspective on the evolving digital landscape, particularly the rise of artificial intelligence. The company stated that the court's decision acknowledged the intense competition and the multitude of choices available to users. However, Google also expressed concerns about the imposed limitations on service distribution and the requirement to share data with rivals, indicating that these aspects would be closely reviewed. The company's argument that divesting Chrome and Android would be detrimental to consumers and partners resonated with the judge's final decision. This ruling has profound implications for the broader competitive landscape of big tech. By allowing Google to retain its key assets, the decision indirectly validates the integrated business models that many large technology companies employ. It suggests that while monopolistic behavior will be addressed through behavioral remedies, structural breakups may be reserved for more extreme circumstances or different types of market abuses. Analysts are closely watching how this decision might influence other ongoing antitrust investigations and regulatory actions against major tech firms. The market's positive reaction underscores the financial community's preference for stability and the avoidance of disruptive structural changes for dominant tech players. While the focus has been on Google's legal battles, another critical judicial decision has just been handed down, impacting a different aspect of the digital frontier. We're diving into the specifics of why a judge ruled against the forced sale of a major web browser and operating system, and what it means for the future. No Chrome breakup. Judge rules on Google antitrust case modifies search practices. In a significant development that reverberated through the technology sector and financial markets, a federal judge has issued a ruling in a major antitrust case against Google, determining that the tech behemoth will not be compelled to sell off its highly influential Chrome web browser or its dominant Android mobile operating system. This decision, handed down on Tuesday, addresses the U.S. Department of Justice's claims of anti-competitive behavior in the general search engine market, opting for behavioral remedies rather than the structural separation of Google's core products. The case, which has been closely watched for its potential to reshape the digital landscape, centered on allegations that Google had abused its market power to stifle competition. The DOJ had argued for stringent measures, including the divestiture of Chrome, as a means to restore a more competitive environment. However, U.S. District Judge Amit Mehta concluded that while Google is indeed a monopolist that has acted to maintain its monopoly, the proposed remedy of selling off Chrome and Android was deemed a poor fit and overly punitive, potentially harming consumers and business partners more than it would help competition. Instead of a forced sale, the judge has mandated certain behavioral changes for Google. While specific details are still emerging, it is understood that these changes will involve limitations on how Google distributes its services and potentially require the sharing of search data with competitors. This approach aims to address the alleged anti-competitive practices through adjustments in Google's conduct rather than through a radical restructuring of its business. Google itself has acknowledged that the ruling imposes limits on service distribution and mandates data sharing, expressing concerns about user privacy and the practical implications of these requirements. The judge's decision to reject the divestiture of Chrome and Android signals a more measured approach to regulating big tech, prioritizing behavioral oversight over disruptive breakups. This stance is particularly relevant given the judge's own acknowledgement that the rapid advancements in artificial intelligence have altered the competitive dynamics of the information-seeking market. The remedies phase of the case was also influenced by the need to prevent Google's search dominance from bleeding into the burgeoning field of generative AI, a concern that the imposed behavioral changes are intended to mitigate. The market's reaction has been largely positive for Google, with its stock price reflecting investor relief that the company's foundational products remain intact. This ruling may set a precedent for how future antitrust cases against dominant tech firms are handled, potentially favoring remedies that modify business practices over those that mandate asset sales. The DOJ is expected to scrutinize the ruling closely, and the possibility of an appeal remains open. The outcome underscores the complex balancing act regulators face in fostering innovation and competition, without unduly hindering the growth and integration that have defined the modern digital economy. As the legal battles of tech giants continue to unfold, a massive investment is being made that could redefine the very infrastructure powering our digital future. We're exploring a multi-billion-dollar commitment to AI data centers and what it signals for innovation and the economy. Google pledges $9 billion for AI data centers in Virginia, boosting tech infrastructure. In a significant move underscoring the accelerating demand for artificial intelligence capabilities, Google has announced a massive investment of $9 billion to construct new artificial intelligence data centers across Virginia. This substantial capital injection is a clear signal of the company's commitment to expanding its AI infrastructure and meeting the burgeoning needs of its AI-driven products and services, as well as those of its cloud customers. The investment is particularly focused on regions with existing tech infrastructure and access to power, with Virginia identified as a key state for this expansion. These new data centers will be crucial for powering the complex computations required for training and deploying advanced AI models, including those that underpin Google's cutting-edge AI tools and services like Gemini. The expansion is expected to create a significant number of jobs, both in the construction phase and in the ongoing operation and maintenance of these high-tech facilities, providing a substantial boost to the regional economy. This announcement comes at a critical juncture for Google, as it navigates both intense competition in the AI space and the ongoing scrutiny from antitrust regulators. While the company is facing legal challenges regarding its search and advertising practices, this strategic investment in AI infrastructure demonstrates a forward-looking approach, positioning Google to capitalize on the transformative potential of artificial intelligence. The development of robust AI capabilities is seen as essential for maintaining a competitive edge in cloud computing, search, and a wide array of other digital services. The scale of this investment highlights the immense resources and strategic importance that AI now holds for major technology companies. Data centers are the physical backbone of the digital world, and the specialized infrastructure required for AI, including high-performance computing and advanced cooling systems, represents a significant capital expenditure. Google's commitment to Virginia signifies a confidence in the state's ability to support such large-scale technological development, potentially attracting further investment in the region's tech ecosystem. This move also has broader implications for the national conversation around technological leadership and infrastructure development. As the United States seeks to maintain its competitive edge in AI, significant investments in computing power and data infrastructure are paramount. Google's $9 billion pledge is a major contribution to this effort, signaling a strong belief in the future growth and application of AI technologies across various sectors of the economy. The company's focus on Virginia suggests a strategic approach to site selection, balancing factors like energy availability, workforce, and existing connectivity. These major investments and legal rulings are shaping the very landscape of the digital world we inhabit. Stick around as we wrap up today's essential updates with a quick recap and a final call to action. That's a wrap on today's essential updates. We saw a landmark ruling where Google must share search results but keeps Chrome, a decision that reshaped big tech's competitive landscape. We also learned Google won't divest Chrome or Android, leading to stock surges, and Google is investing a massive $9 billion in AI data centers in Virginia. Stay ahead of the curve with Google Trends Hub. Don't forget to like this video, subscribe to the channel, hit that notification bell, leave a comment with your thoughts, and follow us on all social media platforms for more.